Welcome, guys. So we've got Brian, Ritesh, and James for today. And today. So what we're going to cover today is where to invest in 2023. Obviously, lots of talks about recessions and lots of talks about unemployment downturn, all these negative things, and they seem to be everyone's pointing towards 2023 to happen. And so we'll chat about what are the areas we think you should be looking at and the reasons why behind that. And in particular, obviously, one of the things we do well is regeneration. Now, before we get started, there's a more serious note that we need to get hold of, which is none of you guys are dressed in, red outfit. What happened? So, cool. Good. So, next week. So guys, what are your thoughts on 2023? Let's start with not necessarily the areas. What do you think goes into making an area a good area to invest in during a recession or during a downturn? What are the key things? Who wants to kick us off?
For me, good area. For me, regardless of recession or non-recession, it's always fundamentals. Yeah. I'm a believer in sticking to cities and surrounding areas, then the surrounding areas around cities, for the simple reason, if we look at the simple economics of property, it's all driven around supply demand.
Yep.
So if you've got concentrated areas where there's too many people, not enough places to live, then ultimately you're always going to find that prices and rents go up as long as you hold it over a period of time. And that's very much reflected in the sort of property that I've always invested in myself and what I've always recommended my clients to invest in as well, because it's very much not just about the good times, because look, let's face it, when the economy is good, there's a lot of certainty around, you can buy pretty much anywhere and everything's going up, okay? But it's a case of, where do I buy so that regardless of recessions or wherever we are in the economy, I know that my property will always stay rented, and even if prices aren't shooting up, they're still relatively stabilized. So it's just getting a grip of the supply demand element and through buying where the fundamentals are.
Yep. Yeah. Okay. And 100%, I think we agree with that. What about you, Ryan? You were going to say something there?
Follow regeneration. Wherever has the biggest regeneration plans, the most amount of money, and I'm talking real regeneration, not these places like what I hear somewhere up north near Newcastle, that there's parts of inland revenue or something or the other moving 600 staff there. So some companies out there are pushing it as a big regeneration story. 600 staff isn't going to bring you anything.
Yep.
What you need to follow is where's the real money being invested in regeneration. So for the past decade, it's been a lot in Manchester. Now Birmingham's really starting to kick off. Liverpool, it's a tough one with Liverpool, because Liverpool has all the fundamentals there to be a great city. Unfortunately, it's full of Scousers. I'm sorry.
We just lost half the audience.
United fan talking here. But in all seriousness, Liverpool, I think now that they're starting to show some cleanup in the political world, with the councillor getting taken out, getting done for fraud and stuff like that. That seems to be going out, and you've got some big players. Is it Peel Group, if I'm not mistaken, gone into the area? You can start seeing that potentially it's an area that you can start focusing on a little bit more. And of course London. London will always there'll always be a pocket across London where there'll be a huge regeneration plan, and regeneration in both formats of the private sector and sort of the public sector investing in the area. And I think as long as you stick to that, then you should be okay throughout any recession, because all we have to do is look at Hackney and Brixton Hackney especially during I think during the recession it continued to grow.
Yep.
Because of the investment, and it only saw its first slowdown in property price growth in like 15 years last year, which wasn't even a massive slowdown. So that's why it is very, very important to sort of step away, and also step away from the thought process of, if I would live there, I would live there. To be quite frank, it doesn't matter where you would live, because of course, if you're the guy with the 100, 200, 300,000 pounds, there's a lot of areas you wouldn't live because you don't need to live in those areas.
Yeah.
But those areas that you're going to invest in are areas that are going to be of huge demand for a big workforce, because inflation isn't stopping any sooner. The actual sort of real wages isn't increasing at the fast pace. So a lot of people that earn below 50, 60,000 pounds a year are not going to be living in your best of areas. However, they are going to be living in areas where there is regeneration going. The area is going to be changing. They're either going to buy their first property there to live in, or they're going to rent there with, giving them the ability to save a bit of money to go and purchase their property. So for me, fundamentals, yes, of course, that's number one across anything. But during a recession, I would purely follow regeneration.
Yeah. I think one of the other things too, and I agree with all those points, one of the other things is I talk about the every person house, and the every person house is, rather than buying where rich people live or where poor people live, you buy where the every person lives, where the vast majority of the population live. And when you do that, you see that there's a robust market there, because the high end of the market, you can suffer void periods because there's not a huge population of people. When one person moves out, the next person can't necessarily move back in straight away. I mean, we've seen, I was watching the stats in New York. The top end market in New York has already dropped 28%, which is a huge drop. Now, albeit it probably increased that much over COVID. But the reality is that, buying in an area where the every person invests is a great opportunity, Now, the every person is changing, obviously. And we're noticing this in the letting side, where we're raising the rates to meet the RPI, but that rate is too much for people to afford, along with the other cost of livings. And so they're having to move out. So it may be that, and this is how the inflation robs people. But I think the reality is, if you go for the every person house, if you go for the regeneration, if you go for the fundamentals, the shops, schools, transport, major employers, major investment, that's certainly the big picture stuff that you need to look at. Yeah. So, I think that's, good. Anything else is there? I'll just say good morning, Kevin. Kevin's joining us. I think you must have us on the little bell reminder, because we've seen you here every time we jump on, which is good news. So, hello, Lakeland, Florida. Actually, I've been chatting about Florida today. Amazing things going on in Florida right now. Not necessarily from property side of things, but from business and entrepreneurship. And it seems we're saying that California is now a bit of a dump compared to what is now, really Texas, Austin, Texas, that sort of thing, and Florida seem to be the two places over there that are really doing well. But anyway, that's not the UK, that's US. Yeah. So, is there anything else that you guys would say? James,
yeah, I mean, just to add to your point, Britt, about the everyday person home. Brett. I had a call with a guy a couple of weeks ago, and he bought a property in Hartlepool years ago, and he bought it with cash. It was 45 grand or whatever. And the last 6 months, he's had a tenant who's not been paying his rent, and it's turned out to be a bit of a rogue, and has trashed the place and cost him all sorts of issues. And it's kind of the sort of "I told you so" sort of argument, whereas look, this is why we've always said to people, buy in city centres, because that is where you're going to attract your highest caliber of professionals, because that's where the biggest employers are always going to sit, and that will bring in the best, most highly skilled, qualified people. And those are generally the people that are going to be your best type of tenants. They're going to pay the rents, they're going to look after property. And look, even if people aren't buying and they're not able to buy, there's still always going to be competition for rental property. Yeah. So you'll find that the rental competition gets stronger and rents go up. So even at the very least, if you're not getting the growth, you're getting good rents, and you're able to sort of stabilize and cash flow and hold that property, because when the market does come good again, those are areas which are going to
and it's interesting, because one of the things we're going to be chatting about next week is the state of the letting market and that sort of thing. And one of the issues we have with this, and one of the suggestions I'm making to any landlord, is that if they can't afford to go without the rent coming in, and they can't afford the legal process to evict somebody, then pay you $200 or $300 to get the insurance coverage for the property, because we're heading to a recession. People are going to lose their jobs. And if they lose their jobs, they stop paying rent. And the way the government protects them, means that effectively you could be out of pocket massively and it affects your life, and there's nothing you can do about it. And if you think 4 to 6 months is what it takes now to evict a tenant, if they want to be silly about it. So if you can't survive that 4 to 6 months, then you need to change that. Anyway, we'll talk more about that next week. So I think, with this whole thing, where to invest. So, there's some really good points there. And I think that's key too. You have to start off with those points in your mind before you go into an area. And actually, if the area doesn't tick those boxes, you're probably best to leave it alone over the next couple of years. Because, and it's interesting, our own story realistically is, we started out selling everywhere around the UK. If we could get a deal, if we get a discount, if we could get regeneration, fundamentals, whatever, we'd do a deal there. But after the GFC, the global financial crisis, we stopped doing a lot of property. And there's a lot of opportunities that we pass over now. And we let go a lot of our developers that we're working with, because even though they were good areas, the fact was that the investment wasn't there for the future. And those good areas became, and over time, they've just degraded, which hasn't necessarily affected the rents. The rents have sort of crept up, but the capital growth hasn't happened. And I think austerity and I think all these sort of things which governments can do have affected those areas. So you've got to be really careful. And I can't stress enough that, if you invest into good areas with fundamentals and all these elements we're talking about, then you're more likely to get a capital return as well as an income return. So, yeah.
Absolutely.
So then so let's just go around. Where's your best place to invest, do you think? If you had to, put whatever, you had however much money, where are you going to invest for the best return, you reckon, over the next 2 years?
I think that question is massively dependent based on the capital that someone comes to the party with as well. If you come to the party with 40, 50K, then, you're looking at probably Liverpool and not much further. You come into the market with 200,000, 300,000, 400,000 pounds, then, I would say London and the commuter belt and look no further.
But let's say you're just basing it on, base it pure, and I agree 100%, that is true. If you take out the money side, what's your pick for the best place across the UK? What do you reckon?
During a recession?
Yeah, for next year. You've got to buy something next year. Let's say in June next year, middle of the year, where are you going to buy? What area?
Watford.
Okay, yeah. Watford. You're not all going to say
transportation.
Watford,
Transportation links, 15 minutes to get into central London. Your rent to the average renter will be a lot more affordable. Your owner-occupier market will buy hugely there. The amount of money that's been invested in that area, the proximity towards London and all the fundamentals are there. So the risk that you're taking is massively reduced. So if I'm going to invest in one place for next year, it would be Watford.
Okay, cool. And obviously, one of the things we have got is this, Watford Riverwell area, which is, 15 to 35. It's got a massive plan, regeneration, the whole lot. Funnily enough, it was on one of my lists of things to do, and obviously, it is a great area. And you mentioned the where it is, it's commutable. Here's London, that's Big Ben in the middle there, and if we follow up here, that's Watford here. So it's 15 minutes, is it? 15 minutes fast
on the train, yeah, on the train. But Brett, if you zoom in towards Watford, I'll tell you another great reason why Watford's a spot to invest in. You look at that next to it, you got an area. Now zoom out a little bit if you can. Okay, next to that area, you got an area called Rickmansworth.
Yep.
Millionaire dreamland over there. Acres of land, massive houses, so on and so forth. Above it, St. Albans, again, another sort of big players there. Bushy, just underneath it, again, another millionaire's dreamland. Yeah. So you're sitting in the middle there. Yeah. Those areas around you maintain the desirability of someone who's starting off to want to live somewhere like Watford and stay there. The schools, the shops, the transport links, all those sort of stuff is centered there. The transportation makes it a great sort of investment. As I said, 15 minutes on the train. It's quicker to get to central London from Watford then I think it would be from like a zone 3 or 4 that's sitting on an underground, because it's running under National Rail and it's 1 or 2 stops and you're directly into King's Cross. So if you look at it, not only does it have the transport, it also has the infrastructure around it with the areas that are surrounding it. And this is why Watford is going through regeneration, because of the areas around it are far ahead, and Watford needs to catch up.
And it's interesting with this place. I know this place really well. I used to Elstree Aerodrome, which is just over here. That's where I used to fly my helicopters out of. So I've flown all around this area. I know it from top down. It's an amazing area. There is huge houses. There is lots and lots of stuff, but actually there's lots of green grass and space. So when we talk about the race for space after COVID, this has been fantastic. There's been huge opportunity for that. And I think that's one of the key here too, is that when you start looking at places like Watford, you could be living in central London. You walk out of your office, you do a couple of tube stations, and then you catch another train straight out 15 minutes and you're in Watford, and then 10, 15 minutes you're in a place. So in under an hour, which is not a long commute by most standards, you could be outside the city, and you straight up the A11, M11 to the to Luton. You've got Stansted. You've got everything right there. And I think that's where when we talk about buying in London, that's great. Some of the London prices are toppity, but actually there's a lot of places outside London that are even better. So Watford.
It's also good from the perspective is it's very self-contained in the sense of if you look at a lot of areas which are commutable to London, they only really rely on that commutability factor to London. There's not much else in the area. Whereas a place like Watford, because you've got, I think, you've got KPMG in the area, you've got other big finance companies. So not only does it keep people who want to live and be in the area who can work, but you've got the commutability factor added to it. So that is just, that just adds to that sort of gravy, if you like.
Yeah. And it really, it's interesting. There was a false start in Watford. That Watford Luton sort of had a bit of a false start. We're looking at those sort of areas, and certainly Watford did. We were going to, there was 3 or 4 developments that were going to go ahead. Then they got stopped. Now they're going ahead again. And I think now it's a great time to look at that sort of stuff, because there's so much money getting spent there. It is so commutable. It's so easy, and a lot of people after COVID are happy to get out of the city and live out of the city, so that they, if we get locked down again, which I just heard something too in Oxfordshire, they're talking about, and I haven't verified this, they're talking about apparently practicing shutdowns like COVID, where they're restricting access to people that come in or go out of areas, which I thought was bloody hell. If that happens, you certainly don't want to be, in a lockdown area. But no, I think Watford, is a great example, and it's one example of a commuter town, because obviously we've said, the ripple effect Pentagon, which is actually just behind Ritesh's head there. We talk about London Zone 1 and 2, 3, 4, 5. Then you got commuter towns, major cities with universities, and we used to talk about major towns with more than 100 people population. We sort of don't do a lot of that now because, to be fair, the fundamentals just aren't there as much. But, certainly commuter towns have been one of our favourites for a long time, What about you, Ritesh or James? What's your pick?
London, commuting out to London, always, no doubt. Outside of that, my pick for the next couple of years, where I think there's going to be some real performance, is Birmingham.
Yep.
Because I just look at the last sort of 5 years or so, 5-6 years, and you sort of have Manchester, Birmingham, and Manchester's been marketed really well, and price for Manchester have really gone. I mean, I remember 2015 it was, when we were getting into Zone 1 equivalent of Manchester, Northern Quarter, 160s, 170s. I just had a development sent to me in the Northern Quarter last week. I mean, it is a very high-end development, but we're talking 300k for 1 beds. So, to give you an idea there. But Birmingham has grown, but because it wasn't marketed as well for me, is now starting to come to the forefront.
Yep.
And, you had this huge big city plan in Birmingham where they want to grow the core of the city by 25%, creating 4 or 5 different districts. So you've got, Digbirth, South Side, East Side, and then we've done projects in all those areas.
Yeah.
And that is now really starting to gain momentum. Rents have started to go up. Prices have started to go up. And I say started to go up because they still, haven't gone to that stage where Manchester went, which is pretty crazy in my opinion. But it's now's the time where I think we can definitely catch that wave that's going to happen in Birmingham. The HS2, which is signed off and sealed now, which 2029 or something around then, that's going to take London to Birmingham 45 minutes. I mean, the guys in the office always have a laugh because I live in an area called Ickenham, which they call commuter belt. They say, I don't even live in London. Mind you, Ryan's moved out to Potter's Bar, so he can't talk anymore. But it takes me, our office is in Farringdon, and it takes me door to door 1 hour to get into effectively London. Someone's going to be able to live in Birmingham or London and within 45 minutes get from there to there, which for me is an absolute game changer because transport, connecting people, to places massively changes, what the property market does. You've already got big companies in the area, so that whole big business pool that we talk about, KPMG, PwC, HSBC, Goldman Sachs are there now as well. So that's already there, and that will only get bigger because let's face it, London will always be the face of big businesses. But when they're looking for second and third offices, and they're looking for more value in terms of the office space, etc., then these places do offer it. Yeah. And you've got the graduate retention now as well in Birmingham. So the 4 or 5 universities there. Back when I was growing up, showing my age now, you might go and study at a university campus outside of London, but as soon as you graduated or got your masters or whatever, you'd come straight back to London because it was the place to, best place to live, best place to get a good job, earn money and all that. But now graduates are choosing to actually stay in places like Birmingham because they've got the same sort of lifestyle that they can have in London, but for half the cost. Property is more affordable, rents are more affordable. So all that demand pool is massive there. So for me, Birmingham is absolutely going to be the spot over the next couple of years to get involved in.
Yeah. What about you, James?
Ooh, do I go for a curveball here, or do I?
What have you done? Your mic's gone to crap.
Oh, is that mine?
Huh? Now you're back.
How about now?
Yeah.
Okay. So look, I'm gonna be the anti-Ritesh, and I'm gonna go the other end of the northern poster boy argument, which is obviously Manchester. I truly believe, and I know Rick made a few good points about when we were getting involved in Manchester and how we've already seen it grow, and I believe that is still going to continue to massively grow. For me, the biggest, or one of the biggest factors that I've seen, I'm actually reading through a JLL report, which we might come to at some point in the stream, but that Manchester population has grown, I think, the last 10 years faster than anywhere else. And that is kind of just a testament to sort of, one, how many people do want to live in the area, but two, people that are staying in the area as well. And I think alongside Birmingham has a very, very high graduate retention rate. So this is all just adding to what we would say is the demand pool for property in the area. Yep. The other thing I like about Manchester, and one of the things I saw as well, I read about on the report, was that the prices obviously have reached a certain level, and new builds in the area have the highest demand for property anywhere else. So we've always said that with new builds in these areas, it's always about setting the bar for where prices can reach, and the longer and the more that continues to go, the more that we can continue to see that growth kick in. There has been a lot of major regeneration that's taken place in Manchester. We've obviously had the Salford Quays, which I think was also Peel Group, who are doing the waterfront in Liverpool now. That's added massive employment into the area with the Media City. You've got BBC ITV there. You've got the central business district in the city. I think that's got sort of around 100,000 employees just in that immediate vicinity. Again, so this is all adding to that sort of supply and demand equation. And there are still more hubs around Manchester which have been earmarked for major regeneration. I think the other one which we've been looking at recently is the Great Ducie Street regeneration project, which is it's going to be 2.8 million square foot of commercial and residential redevelopment, and that's actually just next door to Manchester Victoria. So it's a sort of northwest. Yeah,
I can't see the. Where is it?
I think it's above the gay village.
I'm on the wrong.
It's around there somewhere, but that's it.
So that's going to be one of the sort of next big capital projects taking place in Manchester. So 2.8 million square foot of commercial redevelopment, and we know that with regeneration, and actually the good thing about a lot of these cities, especially Manchester, is that it has so many people and there is not enough land available that they have to start investing into these infrastructure projects to kind of unlock this land to then allow and supplement this demand for people. Otherwise, it will just be, like what London has got, which is a housing crisis in the sense there's just not enough property being built, and that's what's kept prices stable. So for me, Manchester is definitely the one that I'm vouching for next.
I tell you what. Sorry. It's something that's interesting. Is for those of you who remember, who all had invested or were around that property investment circuit back when the global financial crisis happened, Manchester prices dived pretty bad. A lot of developments stopped, and all those things happened. But there's a significant difference this time. I think, and that is back then what you had was a whole heap of property being built. When there was that building boom and property boom going on through the economy, but the infrastructure, the employment, all that wasn't quite set up. So you ended up in a place where you had all this property, but not enough jobs, all these sort of not enough. The transport wasn't that good. But now it's very, very different. So anyone worried that, well, hold on, we've heard this whole Manchester story before back in 2007, 8, 9, whatever, and look what happened then. It's very different this time because now the actual infrastructure in terms of the employment, the amount of businesses, the population, the graduate retention is very different. And Manchester is very much a global hub for investment now. The amount of money that comes in from Asia, the Middle East, it's crazy, and that's not just the Man City owners, I'm talking about, retail investors, so it's in a very different place for just any of you who might be a little bit concerned from what happened back then.
Which it's interesting with the Manchester thing because, so I was selling in Manchester back in 2003, so we were selling and we were doing literally hundreds of units back then, we were running seminars and there was, all sorts of things. And back then, Manchester, in my take, was sort of this quirky little town that I couldn't believe people were going out with no jumpers or anything on and short skirts and all that sort of stuff at night. And it was as if, and it was freezing cold. Here I am all rugged up and I'm an Aussie, But the reality is, back then I used to think, this is just like a northern town. Now when I go there and I see the shops and I see the technology and I see the town and the city and the bars and the restaurants, it is the same on par as any other city, whether it be Singapore, whether it be Sydney, whether it be, wherever. It's on par with that. And I think that's the big change that's happened now. And I think now, which it is, it's the second largest, the second largest city, depending on what grade you look at it. But the reality is, those opportunities and those fundamentals are there, and it really has asserted itself as an international city, not just as a northern city of the UK, or a lesser city than London. It now is it's real on its own. And you could go there and invest just in Manchester and be very happy, because the market is that broad and there's so much happening there. So I think both. I mean, in some ways, saying Manchester and saying Birmingham is a bit of a cop-out for you guys, but we'll let it go.
Let's ask a serious question now, though. Where wouldn't you invest?
Where wouldn't you?
And what? and why. And let's not hear no borrowing, finesse, and easy cop outs. Give a proper. Where wouldn't you invest for next year? Where do you think is going to take
straight away,
I
wouldn't be touching Scotland, because even though I hate the politics that's going on in Westminster, the politics that is going on in what's it called? Whatever it is, the political place there is even worse. They're talking about restricting rents, stopping evictions, all this sort of thing, which is just devastating to a market and will backfire. So I wouldn't be touching Scotland at all, ever. They've, as much as I'm actually 25% Scottish, so yeah, that's where my heritage is from. So shout out to Paisley, but that's that. I wouldn't be touching that, and I think this is one of the big problems right now. And it's interesting. I was having lunch today with one of my mates, and I was chatting about my frustrations. We're basically, he's in a similar situation to I am, where we're sort of pivoting the business because of the recession, and also because of where we are, stage of life, all that sort of stuff, and we want to go to the next level of growth. And it was interesting because he was saying, well, what's your biggest frustration? You still got passion for property, and I said, absolutely, I've got passion for property. That's not a problem. The thing that pisses me off the most is these politicians that don't know shit, that just jump in and they just knee-jerk reaction make changes. And I think the biggest risk in property now is not rising interest rates. It's not capital values dropping or anything like that. It's political intervention where it shouldn't be going, and that's what's screwing a lot of things over. And certainly in the last 5, 6, 7, 8, 9, 10 years, and even since the global financial crisis, it's been what the politicians have done, which has caused so much heartache and pain for mum and dads who were just trying to sort out their pension, and it really hasn't made it equal. They've tried to level a playing field. That hasn't happened. They've failed in virtually everything they've attempted. But yeah, that's my little rant for the day that got off. So, it's interesting because in terms of where I think I'm going to invest, look, I'm as much as I think there's opportunities everywhere, and I agree, Manchester, Birmingham, Watford, love all those, I'm still a London person. I love London. And I think as much as London stopped growing in 16, still had a little bit of growth, but, the big growth had done. And then realistically, we would have seen it stop for a couple of years, and probably around the Brexit time or the COVID time, we would have seen the market start kicking off again. But because we had COVID, that extended it for another 2 years. And because we had Brexit, that sort of extended it. So actually, it's been sitting in limbo for quite some time. But I still think the fundamentals are bloody fantastic, and I don't think that has changed. So for me, London property is where to go. Now, where do you go? Well, obviously, I love regeneration. So, for me, places like, and if we just go to, let's say, like for me, places like Lombard Square, which is in Plumstead. Now, this is the Barclay Homes website. We sell this one. We've been selling Royal Arsenal for quite some time, done really, really well. And now you look at the prices there in Royal Arsenal compared to Lombard, huge value. And this is heading out towards what's called the Thames Estuary, which is a swamp. And let's call it for what it is. Sorry, Ryan, I've got your face on here, not mine. But
yeah.
How did you get it? Somehow you stole my my picture. Anyway, no, look. So the reality with a place like this is that I think there's huge opportunity for these type of places, because the Thames Estuary now, we're running out of land. Government's releasing land. Government's not forcing, because actually the one interesting thing which is going to play into our hands as investors is they've stopped having targets. So local councils can say, we don't want more construction. Now, the problem with that is that's going to drive up prices. That's going to drive up rents, because anytime you restrict the supply, and we've got a supply problem, that's going to further drive up the prices, which is good news if you're an investor, really bad news if you're trying to get on the ladder. So that's really, but that whole Thames Estuary, it was a swamp, but these days we can deal with swamps. We can get the water out, we can raise the levels, we can put barriers in, all sorts of things like that. Would I want to buy out on some old swampland? No, probably not. It's one of the things that we check when we actually do stuff, and we generally don't touch. Ryan's giving up on us. He's leaving. He doesn't like my opinion. But no, but it's interesting.
No, I just realised my battery's running out. Sorry.
So one of the other areas that I actually think too is this Brent Cross sort of area, and it's interesting because when we talk about Watford, if we go back to that original map of Watford, if we come out with there, so this is Watford here. Hold on, yeah, there. But basically, as you come out and go into town, straight down, and this is basically M1 down here, straight down. This is Brent Cross here, Finchley, Cricklewood. This whole area is being regenerated now, So it's massive regeneration. And then you go into the city, So that's another area that I think, and these are major, major regeneration areas that I really think have got potential. And even if we see dips in house prices, we're likely to see it come back pretty quickly because the sheer scale of the regeneration that we're seeing in those areas. So for me, I love London. What area do I love in London? Look, I love lots of areas in London, and where that depends on where the regeneration is. But, there's major, major regeneration happening in a lot of areas across London. And for me, if you can find that area and find the right deal, and one of the good things I think for next year, and even now we're starting to see it, now we're starting to do it, is when we talk to developers, we're actually going to them with the ridiculous offer. It's almost like the offensive offer where they're basically right now saying, no, you're ridiculous. How dare you even offer that? But what I know from experience is they reject it today, but in 3-6 months' time, they come back and go, hey, Brett, hey, Rit, hey, Ryan, hey, James, that deal you put on the table, can we relook at that? And the great thing is that's when we go even further down, because why not, and that's what's happened. That's where we're at, Now, how far we can get it down depends on what happens over the next year or two. But, I think 2023, what it holds is we're going to see unemployment increase. And once unemployment increases and that cycle starts, then it's a 2-year timer starts, because what happens is we shed off the jobs and we have to get the jobs back. And once we get the jobs back, then we have to train the people up to become productive. And until those people are productive in their new jobs, the economy doesn't fully get back to recovery. So it could be 6 months, it could be 12 months, it could be 2 years, unless they really screw it up, in which case, we could have a depression event, which could be 4 years, and really that's kind of unknown, but there is a deleveraging that I think is going to happen. But I think UK, because we have been so self-harming since Brexit, since COVID, since all these things, actually we're not likely to see the drops that we're likely to see in the US and other places. We don't have,
I think we've maintained pretty well, even during self-sabotage.
We have, but what we haven't seen is the prices grow. I mean, I'm in Australia right now, and I look at some of the prices here, and I'm just like, how the freaking hell? Like, wow, we haven't seen that in the UK, and the same thing happened in the US. Now, they've gone up, but they can also come down, So whereas the UK hasn't really gone up, nowhere near like it has in those sort of places, and so it may not come down as far as well. Plus, we've also had what's called the mortgage market review back in 2014, which meant that you had to affordability and restrictions, and that's all been piling on, which has been keeping and suppressing the demand. You need more money to buy into a property. You need to have more affordability. And that allows a lot more gap in the market before people have to sell. So I think all these things play now, and as much as they've been painful the last 10 years, now is when hopefully they benefit us. Yeah. So anywhere else you think, guys?
To invest in?
Yeah.
I think it's because we started off with this as where would you invest during a recession?
Yep.
It will. You're not going to be massively spoilt for choice, because any other place you're going to pick is going to be a bit of a gamble. A bit of it might work, it might not. I think more important though than area is strategy of how and what do you invest in during a recession. So for example, a lot of people are naturally driven towards high rental yields, not knowing what are you sacrificing for that high rental yield, and it's more than just growth, in my opinion. I think when you chase things like high rental yields or high yielding investment opportunities, you're risking way more than just your growth. You're risking your entire capital to an extent. You're risking a lot of things. So I think the question for me, more than area, is what sort of strategy do you follow during a recession? Do you go and enter the second-hand market? Do you start doing refurbs? Do you start doing HMOs? Do you start doing student accommodation? Do you start doing this or that? What is that strategy you follow? And everyone has their own sort of opinion and thoughts on what the best one is, and some are valid, some are wrong, and some people are just absolute crooks, the ones that try and push you student pods, for example. For me, I think if in terms of areas, there aren't too many that you should pick during a recession. You should just pick city centers, strong fundamentals, follow the regeneration money. That generally gives you 2-3 places, maybe 4 at a push. Next step is, what do I invest in? Do I go down the second-hand route and look at the second-hand market and pick any second-hand property and just go and invest there? We're talking London, Manchester, Birmingham, and even Manchester, more so Manchester and London. Do I just go and invest in any area, any part of Manchester or London, picking the specific pocket within those areas, and having that right strategy that will work for that area, for that market, in this current property cycle, which is a lot harder to sort of answer, and it's a lot harder for people to actually get their head around what is the best investment to go down, because it doesn't necessarily mean just because you've been doing, for example, refurbs for the past 10 years and it's done really well for you, it's going to continue to do well during that recession. What is the strategy to go on? So for me, it would be off plan. Is a massive strategy to look at during the sort of these sort of markets, because to an extent you're maximizing your leverage, you're looking at that long-term sort of growth in the property, and you're hedging your bets against sort of the regeneration of the developer without chucking all your money in straight away, leaving you liquid to be able to take advantage of more opportunities that come up in the market. And I wouldn't go beyond those three sort of areas that we mentioned, or 4 areas that we mentioned.
Yeah, it's interesting with the one of the things I find is that through recession is that when you talk about strategy, is a lot of people all of a sudden they go, I've been doing this, I know the rules of the game, I know this strategy, I know how it works, and then all of a sudden what happens is we hit a recession and they forget everything they've learned, and they go, I'm going to go do this now, and they start a whole new strategy from scratch where you've got to relearn all the lesson, the rules of the game, all that sort of stuff, and it's the biggest mistake possible. And it's interesting because we saw this play out in the last recession with the global financial crisis. We had, 50 competitors. And what we saw was in the space of about 8 months, 10 months, 12 months, we saw it go from 50 competitors down to very few left, let's say 5 or 10 guys. And a lot of them, what they did was they go, you can't make money in property anymore in the UK. So we're going to go sell Bulgarian property. We're going to do Spanish property. We're going to do A, B, C, D, whatever. And they changed strategy. And all of a sudden, when they changed strategy, they didn't understand the rules of the game, the market, the clients they didn't have. And by doing that, they almost compromised the existing database they had. We stayed on that point. And I say as a business that we stayed on that, but it's the same as an investor. I think the worst thing you can do is sit here going, the market's changed, I'm now going to change strategy as the market moves. Because when the market moves, it moves relatively quickly. It'll have periods where it does bugger all and it stays pretty stagnant, for a long time. But then all of a sudden it'll change. And if you change your strategy at the same time, you can end up with real problems. And then if you don't understand the game and the rules, then, you end up losing money. And that's what a lot of people, and I guarantee a lot of people will do that. They will try and find the biggest sales hype, the biggest commission that's being offered, the biggest discounts being offered, all this sort of stuff. And the reality is, the reason they're offering big commissions is because it's a shitty area that's going to drop even more, and then they're left holding the bag. And that's not what you want. So stick to your fundamentals, stick to your, every person house, stick to, the original fundamentals we talked about, that sort of thing. And actually, stick to what the rules of the game and the relationships you've got that work. And I think that's one of the best things that you can do for investing next year. Any other thoughts on that, guys?
I just think recessions in general flush out the crap.
Yeah.
Look what happens during recessions. Every business gets lean as they can. They look at their productivity. They look at where they're spending their money, where they're getting value for their money, what is worth spending, what isn't. And up to a certain degree, even with investment strategies, like people who have, you could sometimes make an investment and it does well for a year or might work once for you. Where you get money in, get money out quickly in a certain part of the economy, fine. But the ones that stand the test of time is what I'm interested in. So, and that means having an investment strategy, investing in property or whatever it is that you can hold through recessions. Because if it can't hold through a recession, either that strategy is just short-lived, it was a bit of hype that you got involved in, okay? That's one of the things that can happen. Or you just haven't planned out your end of the bargain very well. So in property, that might be, have you cash flowed your investment every 2 years? Have you factored in higher interest rates through tools like mortgage cost averaging that we talk about, working on a nominal interest rate, which is higher regardless of where the rate is to stack capital aside for, all these things. So, recessions, no one wants a recession. I'm not going to sit here saying it's a good thing, but up to a certain degree, there's a school of thought where it does clean out, things which shouldn't be happening or shouldn't be invested in, or people with poor business strategies, all those sort of things. Yeah. And that's what I think we're sort of going to be at over the next 12 months.
I mean, it's interesting. I love our developers and I love who we work with. But you do get, and developers do get an arrogance about themselves when the market is doing really well, where they're like, no, this is what it's worth. And it's like, well, it's not really worth. You're actually pricing, and this is what happens if we start to reach the top of the market, is they raise the prices. So even though it might be worth this now and they're completing then, they'll get the price here. And so you're kind of like, well, I'm paying over the odds at this point in time, but there's no other choice, And unfortunately, that's the new build premium when that starts to blow out at a certain time in the market. The good thing now, it clears that out and it brings them back down to earth, where rather than us having to court them, they start courting us. We start getting free lunches and things like that. Not really, but but no, it that does happen, and I do. As much as I hate recessions, I love making money doing nothing. The reality is the recessions do clear it out, and they do help reset everything. And I think that's what we're seeing now. We're seeing the reset already begun, and we play the game where we have to forward anticipate what's going on, because we've got to go, actually, this is how much discount we want on a property, because I think the price is going to come down this much. So we want our investors to be ahead by the time it completes and things like that. And we've been very successful at doing that. Certainly, post-global financial crisis, since we moved into the places, good fundamentals, we haven't really had too many problems with that. That's not to say that prices don't go down, but they do. But oftentimes in those fundamental areas, when they do hit a recession and they go down, they come back up pretty quickly, So, yeah. Anything else, guys? What any other areas that we should make special note of? Is there anything else? I'm trying to think. Actually, I was going to say one thing too. It's interesting because a lot of people will say, "Hold on a sec, recession." I think everyone's sort of flight to space, quiet quitting. So all these holiday destinations, I think I might look at Airbnb Well, there's two things that are happening now with that Airbnb, the service accommodation, that side. Number one is that councils now are putting in regulations that are going to actually really make that area a lot more difficult. And if you look around the world at what's been happening with those areas, you look at a hotel and the standard they have to be at with fire exits, with all this sort of stuff, everything like that. That's where they're going to put the Airbnbs. And the moment you do that, that takes away all this margin that you're getting. The other side of it is that I forgot the point now. So Airbnb, no, it'll come back to me.
On that Airbnb quickly, Brett, though, if you do buy, there are some developments coming online which are purpose-built for service accommodation. I think those are worth an investment in, because if you're purpose-built for something, I think that's going to come across the board with everything. And that's why I think long-term new build is going to way outperform the second-hand market, because new build will always be in line with regulation. Across a number of things in terms of materials. For example, a lot of the older houses, the new materials doesn't actually do the job on the older houses from a condensation point of view, mold point of view, and so on and so forth. And a lot of the new insulation, I heard the other day something I had no idea about. You cannot put an insulation, the particular insulation that a lot of new builds use now, in an older house in the loft, because it blocks out too much of the airflow. And the older houses will get molding, versus the new houses, the way they're built with that insulation, they put the dedicated airflow vents in there. So a lot of these things people don't actually know about, and they think, okay, let me step out there and buy a secondhand property. It's 100K cheaper, not knowing, hold on, get that up to standards is going to cost you a lot of money. And I think the new build market is going to well outperform everyone. And the same thing with the serviced accommodation and Airbnb. You can no longer just go and I'll buy this cottage and I'll make it an Airbnb. I think serviced accommodation will be regulated, and purpose-built service accommodation is not a bad investment.
And for those people that are sitting out there, I mean, we've had quite a few cases recently. If you go back a year ago, we'd find out there was a service accommodation in there, and the block manager would be like, oh, they're not allowed to do that. We'll send them a letter. And they get a letter, and you know what happened? Nothing. Well, now block managers are starting to go, no, this can no longer be done. So they're actually deactivating fobs, they're tracking fobs, they're doing all these sort of things now to restrict that, because it's written in there that they can't be service accommodation. And actually the problem is, and we've had this recently with a new property we bought on, the landlord's come across to us because he was doing service accommodation. He got totally screwed over, because what happened was he wasn't allowed to do it. Somebody had signed a contract, and because that contract was there, they ended up having to pay out the contract to get the person out, because they had a contract that they didn't even know about, because they didn't carry out the checks they should have. And the judge said, too bad, you didn't carry the checks out, pay them out, to get the property back. So we've taken the property on, obviously not on a service accommodation, but I think that's an area where, a lot of people are sitting there going, I'm making $2,500 and there's YouTube videos. This is, retire in 60 days. I think a lot of that, because I've seen regulation come into lots of, aspects that we do. And as soon as that happens, the margins start to get pushed. Now, if you've got a big enough portfolio, you can probably ride through. You can probably afford it. But if you've got one here, one there, two there, whatever, that might not become viable anymore, or as viable. But yeah, purpose-built, fine. I think short-term rentals, there's a market for it, definitely. But yeah. What else, guys? Anything else? Finish off?
So, I mean, just to finish off from my perspective is that, so, obviously we mentioned a few areas there, but I mean, if we just step back from actually the names of those areas, I suppose it's the key to, where you should be investing over the next couple of years in the sort of cycle that we're in, is where the best fundamentals are, in terms of make sure there's, good school shops, transport, and diverse employment opportunities as well, because we're living in a world where things change very, very quickly, where one industry might be thriving and then technology comes in and just steals all the income and jobs that industry offers. And all of a sudden, an area just dies because it's reliant on that one industry, versus being in areas which the ones we said earlier are, you've got service, banking, finance, tech, education, you name it, so that if any one given industry or two industries in that area happen to take a bit of a dive, it's not end of the world, because guess what? You've got another 3, 4, 5, 6. It's not just reliant on one or two industries. And that, for me, is very important in where we are and where we're heading.
Yeah, 100%. And I mean, it's such an interesting time now. I freaking hate it. There's so much compliance. There's so many changes, because really, to some degree, and who knows whether it's a conspiracy theory or whatever, but basically there's so much focus on, saving the earth, which, look, I'm all for if that's the reality. Who knows, whether it's real or not, or whether it's just one big cycle or we contributed to it. Let's not get into that here. But I think the reality is that we're heading towards that. So that's going to cost. And the reality is the government's proven time again that they're not going to pay those costs. We as landlords have to pay the costs. The challenge I have is, where are we getting our profit from with all these changes and that sort of stuff? It's actually, Arsenal's just sent a good thing in. I need to change the colour of the bloody font here. But anyway, so Passive House seems like an interesting shout to future-proof compliance in environmental social government. I think it's social governance, ESG. But a Passive House is effectively, how do you build houses? It's a standard methodology, I think. But yeah, basically, you're right with that. There is a lot now of standard methodologies, but technology is playing a huge part in new build properties and that sort of stuff. Perhaps not as much as I thought. I mean, but I think it is now starting to become commonplace, and I think as that becomes more and more commonplace, better. But I think the sort of this Passive House principles. Are they principles? Are they? I suppose you call them principles. It's effectively a template on how to build an energy efficient home, and that sort of stuff is great. But you're not going to get that in a second-hand property. That's the new build stuff. And that's what most builders, certainly your larger guys, are building to these days, those standards that are set. I'm pretty sure they are standards. I'll look it up. We'll mention it in the next one anyway. But I was reading, I haven't read about it for a couple of months now. But yeah, it is amazing the technology that's going into stuff now. So yeah, I think definitely new build from that perspective is great. And as we go and, towards saving the planet, they're talking about discounted mortgages. They're talking about better rates. They're talking a bit like EV vehicles, government grants, all these sort of things, So yeah, cool. Anything else? I think that's pretty much it, is it?
That's pretty much it, I think.
Yeah. So, well, guys, thanks for today. Guys, any questions you've got, feel free to send them in. You can send them in to support@gladfish.com. And but otherwise, we'll see you next week. We're going to be talking through lettings next week, the state of the lettings market, where we think it'll go, what's going to happen, what's in store for 2023. But obviously, if you're interested in investing, anything you want to know about, where we think the market's going, whatever, give the guys a call. And we're happy to chat through. Darren just commented, "Thank you. Someone finally recognised my jacket." I assume by sick he means good sick.
Yeah.
I was trying to find the Santa hat, but I couldn't find it. So anyway, and I got rid of the blonde hair now. Santa. Yeah. No. Awesome, guys. All right. Well, thanks very much, guys. And yeah, any questions, send them through. support@gladfish.com. Otherwise, we'll see you again next week. Actually, I think next week will be the last
for the year.
We'll do the last for the 20th. Yeah, but the good sick, he said, Darren said. Thanks, Darren, I agree. Awesome. All right, guys, thanks very much, and we'll see
all
you
the best.
All again next week. See you later.
Take
Bye.
Care.
See you. Bye.
Bye. Where's the